Okay, got it. Okay, good morning, everyone. Let me get this over here. The quality isn't coming through as well on YouTube, but that's fine. I like to stream anyways in case people want to join in and catch some good information. Because this is a private event. Okay, so let me get this. I'm sharing this link. Danny, can you send a link? I don't even know how to invite people. Invite under my founded email. Yeah, I got it right there. Okay. Hi, Anna. Happy to have you here. Okay. And we also have, okay, great. I'm almost ready to get started on this, everyone. I'm really excited. Partners. So I have a really full, like a great like event for you guys, a great course. It's going to be include everything you need to know when you're filing your renewal for your multi-member LLC. Let's do. Okay, so I have it right here, outlined about what we're going to talk about. And make it 0. Okay, so I'm going to share my screen and we're going to put you over here. And we're going to get started with some of the stuff. We have a lot to cover today, honestly. So let me share my screen. Well, actually, I don't need to share my screen about this. So today, thank you. First of all, thank you everyone for being here. Today, I'm making this training, this course on what you need to do in the US to keep your company compliant if you have a multi-member LLC. And that means if you have an LLC with more than one owner, if you and your brother are 50-50 owners, if you own 99% and you have a foreign corp that owns 1%, or if you have whatever, if there's more than one owner, if you, your brother and your sister and your mother each own 25% of an LLC, we're going to go over everything you need to do each year to keep your company legally compliant. So that's what we're going to do in this course. If you have an LLC with multi-members, watch the course and you're going to know exactly what you need to do each year to be compliant with the IRS, with the state, with everything. So first, let's go through the easy stuff. What forms do you have to file and when do you have to do them? So first, you have to stay compliant in your state. And that would include filing your annual report and having a registered agent in whichever state your company is established in. If you open a company in Wyoming, then you have to keep your registered agent and pay to renew it each year. If you have your company in Delaware, you pay to renew the company each year with the annual report, and you pay your registered agent to stay on there as well. And it's really important to do this because if you don't, your company won't be in legal standing, and it'll affect your accounts. It'll affect everything because your company won't legally be open. It's pretty easy to do this because the company you use to open this entity, whether it's like whether if you worked with us, obviously we help you with that. But if you work with like LegalZoom or whatever, they will email you every year about paying to do the renewal. And there's a small fee. I would just pay and renew with them. It's pretty easy to do. It's pretty standard, and it's very important to do that. Okay, so that's step one. The first thing you have to do. The second thing you have to do is, it's a new thing. It's a FinCEN filing. If you go to fincen.gov, FINCEN.gov, there's a new requirement for foreign-owned companies, and it's still pending as of the time of recording. They still haven't given us full guidance on how to do this filing, how to complete it and transmit it and send it. So that's still pending. But if you follow me on any of the social medias, if you are a client of mine, I'm going to let you know, and I'll be in touch about this. And it's something that you have to do, and it really all you're doing is reporting to FinCEN who are the 25% foreign owners of your company, and that's all. There's no information about financials. There's nothing there. So that's kind of straightforward. We're still waiting for guidance on how to do it. And then the third thing you have to do to keep your company in compliance, your LLC with multi-members, is file your annual tax return, and that's Form 1065. And that's what we're going to do in this course. That's what we're going to spend most of the time today doing, is filling out this form so that you know how to do it and complete it, file it, and submit it. And then additionally, there's some bonus videos I'm going to go over, and that's going to be how to do the filings for the partners of the company. And I'm going to be talking about this whole concept and everything that we're filing here, the whole video. So I think it's, we're going to be going over a lot of stuff, a lot of content. We're going to actually fill the forms out together. Okay, so those are the three things you have to do. One little extra caveat is if you don't have any income or expense activity with your company, you actually don't have to file the 1065 form. So if you opened a company in December or September or even January and you never used it, you don't have to file a tax return, a 1065, to report that. It's only if you have income and expenses that you should be reporting is when you have to file it. And it's a little bit different from the multi-member or the single member LLC, the Form 547, the Form 5472 that has to be filed for a single member LLC. It's a little bit different. Okay. 11. Okay, so give me 1 second. I'm just organizing my notes here. And the next thing we're going to go into is just getting all the forms that we need. So give me 1 second. You'll get my water really quick. Okay, so does anyone have any questions about this? Who has to file? When do you have to file? What do we have to file? Who has any questions? Because I know I have some people here. And this is, again, for multi-member, foreign-owned multi-member LLCs. It's for all LLCs, but specifically in the form filing, we're going to be talking about the foreign-owned LLCs. No questions. Are you all still here? I know I know we have a small group here on the Zoom. Vikas, ask me some questions. I'm happy to help. Well, I want you to, okay, you have a lot of questions, but okay, so just ask the questions that apply in each situation that we're in each section. So if you have any questions about generally what's required to be filed, the renewals or anything, ask those questions now, and then we're going to go over the actual forms and complete the forms together. And then you can ask me those questions as we get through those too, because I want it to kind of be as organized as possible and not just have like a bunch of random questions. Okay, so no questions so far. Perfect. So I'm actually going to share my screen and we're going to go through and download all the forms we are going to need to prepare this. And I'm going to go over the facts as well. So let me share my screen. Okay, and you can see this, and when I change Windows form 1065, you can see both of the windows that I'm doing, right? Let me go to chat. So you can see me searching for 1065. You can also see. So these are the facts. I used basically the same facts in this example. So in this example of what we're going to do is James Baker. I'm a citizen and resident. Well, just James Baker is a citizen resident of Norway. James owns 50% of the LLC, and the company, James has a company, Norway Co., which owns 50% of the LLC as well. It's a Norwegian corporation. This is the company name and EIN. This is what I'm doing. And there's no US presence. So the big important thing here is like how well, I have the outline here. So those are the facts, right? And I want to talk about now why you don't have to pay taxes on the profits here. So let's go through the example. Total, let's do like this. So this is the results right here. Let's underline that. So we have $150,000 net income. So this is the example. Why do we not have to pay taxes on this income? Well, I don't go into this. I don't want to go into a ton of detail, but the LLC is a pass-through entity. So all of the results of the LLC, the owners pay tax on the results. If the LLC has U.S. business activity, U.S. presence, which means they have an office or they have certified employees or directors, or you do business in the US. For example, if this company was installing kitchens and you're in the US installing kitchens, there's a lot more you need to do regarding withholding taxes. So if there's a multi-member LLC, important notes here, if you have a multi-member LLC and you do have US activity and you do have foreign partners, the LLC should withhold taxes on behalf of the foreign partners. However, when you have a US LLC and you have foreign partners, but you do not have any US activity, there is no withholding required. And we can see that on Form 8804 and then Form 8805. And it's really, really technical, Form 8805. And these forms are used when a partnership, annual return for partnership withholding tax. So per section 1446, a partnership is required to withhold taxes on US source income attributable to foreign partners. So you enter the number, and I like to just go through it here. So it's the partnership info, the withholding agent info, usually it's the partner. And this is the form, it goes with your partnership return. We're not going to be completing it because if you are a foreign-owned partnership and you do not have any U.S. activity, the form is for you. But if you do have U.S. activity, this is way more complicated. I guess we can go through it a little bit here in this example. However, it's not included in my main example because this isn't the case for most of my clients, right? So you enter the number of foreign partners, that's fine. And then this is the line here, total effectively connected taxable income allocable to the foreign partners. So, perfect question. So, this is effectively connected with a U.S. trade or business. So let's take some notes here. So, okay, control enter. Effectively connected with a U.S. trade or business. So having U.S. clients does not mean you have a U.S. trade or business. This is more determined. This is the U.S. trade or business is explained in code sections like the 812, I believe, 821. I don't have it up, but is based on where the services are performed. And this is a really important concept in the US, and it holds true. It's where you're doing the work. So if you're on your computer in Norway, in this example, I should be paying tax in Norway. I don't have to pay tax in the US. I don't have a US trade or business. That's why on these forms, it's really zero. The total amount is zero. And if you want to file this effectively, proactively, it's also something you could do. I'm still like on the fence whether to do it or not. You know what? And I think we're gonna do it in this example. Let's just do it with your changes. So I'll just leave it up. I'm gonna fill it out and then we'll print it. And we'll do the form 8804. We have a lot of forms to do here because the partnership forms are complicated. Okay. So having U.S. clients does not mean you have a U.S. trade or business. U.S. trade or business, explain the code. So that's an important concept there. So if you don't perform any services in the U.S., have an office in the U.S., have employees, or do anything else physically in the U.S., a foreign-owned multi-member LLC would not have to pay U.S. income taxes. Moreover, a multi-member LLC would not be required to withhold taxes on income attributable to foreign partners via Form 804. Okay. Questions about the tax stuff, because I want to get over a little conceptual stuff before we get into the actual forms, so that you're really happy with you really understand this. Here's another one. Having a business partner who lives in the US doesn't help really, like that generally would make it a US trade or business. Generally make this a US trade or business subject to US taxes. So if you're in that situation, schedule the call and let's figure out a better solution for you. Okay, having a US citizen as a business partner, but he lives outside the US all year, this would not make you have a US trade or business, but your US citizen partner would pay US taxes on the income. Personally, that's his problem. He pays taxes whether it's in a partnership or an LLC or whatever. He has to pay tax on everything. Oh, you can't see this. Oh, you can see the screen now. Okay, so you can still see this, right? You can see what I'm typing. I'm sure. I think you can. Yes. Okay. Thank you. Okay, good. Because actually, I can check here. Yep, on YouTube they can see it completely illegible. Sorry, guys. Tony has FinCEN. You can get a phone number from anywhere, Aziz. Phone number from anywhere. Tony, FinCEN. So I'm going to go to this Corporate Transparency Act briefly. Corporate Transparency Act. Here's from congress.gov. I mean, if you want to go through the bill, the division requires certain new and existing small corporations and LLCs to disclose information about their beneficial owners. An owner is someone who exercises control, owns 25% or more in the company, or receives benefits from the company. It's or. So even if you don't own the company, but you're getting the money from it, technically you would have to do it. And this is all about anti-money laundering. And the reason I think this is important, and I have much more content to make about this on the YouTube channel and on other things, but the reason I think it's important is to match it up with banks, just to make sure that the ownership reported with FinCEN matches the ownership on the different bank accounts. Okay. Cool. It's going through. But yeah, any phone number. I mean, I would try. I like. What do you call it? You can use Skype. You can use Ring Central. Google Fi is pretty cool. The other one, Hushed App. It's called Hushed App. Hushed App. Phone application. Sorry, that's my personal YouTube, whatever. Okay, so back to what we're talking about, paying of the taxes and going over the forms. I wanted to really touch on this a little bit. I think it's kind of clear now that, if you don't have anything in the US, you don't have to pay taxes. Now let's get back to the forms. So we're going to go to the next stage, which is downloading the forms. I'm going to prepare the forms on the browser, just because it's easier for sharing and completing the forms. However, if you refresh the page, you'll probably lose the information. If you download it, you'll probably lose the information. Once you fill this out, you need to print it to PDF in order to keep the information. It's not a foolproof process, but it's better for what I'm doing right now. It makes the presentations easier. So we're going to go to form 1065, and we're going to let's pull up the instructions. They're really helpful. And let's open this up. This is the actual tax return right here that we are completing. Make sure you have the right tax year, very important. Let's also pull out, we're going to get Irs Form K1 right there. And I got a treat for you guys. We got the K1s here. Great. 8804, Form 8805. I don't really think we need this to show the amount of, I think this is like, yeah, we don't need this. So we're going to do Form K2 IRS. And we're going to actually do this too. We're going to do the K2 and the K3, guys. These are brand new forms and they're terrible. However, since we're doing it manually, we're going to do it together. IRS Form K3. Oops. K3. Great. So we have all these forms, 2021. We have this K2, we have the 8804. I think and they have the sequence number. No, they don't. Well, I'm gonna put this one at the end, and we're gonna just bang through these forms. The instructions are great because they'll tell you literally everything about it. They'll even complete the line items with you. So if you have a question, you do it here. And obviously this is where other form statements may be required, if your partnership owns foreign corps, this example is really that we're going to prepare is really limited to these facts. These are going to be the facts in this example. I don't want to go, if there's anything else on top of this, like if your partner's LLC owns foreign businesses, offshore stuff and other investments, I'm not going to be talking about that. You should probably hire a real accountant to do it. This is for literally this example. You have a guy who owns him and maybe his company, maybe his brother, it doesn't really matter, owns an LLC, and they do it for offshore internet stuff. They do it like literally no office employees, no physical presence, all sales are done and services delivered from Norway, from James's home in Norway. Okay, great. So let's start filling these things out. So the name of the partnership is Hatman LLC. We have the EIN number. Let's put that in there. We have the street number. You can use your registered agent if you have to. It's better to use a place that actually gets mail. 80 Southwest. I'm just using this address. 3303, Miami, Florida, 3313. Total assets. Okay, so we're gonna go over that. Date business started, whatever, 1/1/2021. Started in the first year. If your business started like, and again, in the US, the dates are different. So it's gonna be like March 1st. I know it's reversed from other countries, so that's how it is in the US. It's a month, date, year. Then on here, you would put March 1, 2021 to December 31, 21, if it started during the year, and then you also check initial return because you're telling that the IRS is the first year you've done a return. If you're amending it, if you're changing the address or the name or whatever, again, you should change the name of the state first, then you check these boxes. And if you're closing the company, clearly you're going to put final return there. So, in this example, let's say this is it. Let's say this is what we're doing. Principal activity, business activity, marketing, principal service, digital marketing. Cool. And then business code number. IRS business activity code number. So if it is second time, so for you, Mona, you are going to just not fill this out. Leave this blank, put the date started, leave this blank. You don't have to click anything. So if your business isn't new, and again, we'll say mine isn't new anymore. And get rid of it, and we're gonna say, really, if it's 1/1/2021, it's not. It still is an initial return. Let's do it like this then. 1/1/2020, and then you just leave it like that, right? Accounting method, almost always put cash. It's easier. Number of K1s, the K1s. Attach one for each person who is a partner at any time during the year. We have 2 partners, right? And the example here, we have James and James's company, the 2 partners. That's clear, right, Mona? You follow me? Any questions out here from my chat, guys? Boom today, says this guy. Okay. So we're filling this out too. Gross receipts or sales. I like to put the commas in there. Okay. Check if partnership aggregated. Nope, didn't do that. Nope, not doing that. Not gonna touch any of that. 2. That's it. Total assets, we're gonna come back to that. We'll come back to that. So let's enter in the financial data. We have the stuff right here. I would group it into make it as simple as possible. Again, you're mailing this to the IRS. Who knows when they're going to process it and what they're going to do with it? I don't. So let's get through here. I put these amounts in: admin expenses, software, and contracting. Okay, I'm actually also going to sit down. Okay, I'm back. Okay, so I'm gonna make this little box bigger. I can. Cool. Okay, so we're on page 2 right now, or page 1 still, and we're gonna add these expenses. Admin expenses, whatever. Appreciation. Okay, so it's basically all other deductions. So we're gonna have 200, 1, 2, 3. We're gonna do it like this. We're gonna add another statement here too. Total other deductions. Yeah, so we're just gonna have a basic statement. Again, they don't like manual filed returns, but you can't electronically file returns unless you are like me, like a licensed tax preparer in the US. So this is how we're going to do it. Other deductions, great. So we have a supporting statement. We're going to print that and organize that later. Let me do my math again. 200,000. I'm not an idiot. Perfect. 200,000. Total deductions, 200. 1, 2, 3. Ordinary business income loss. Great question, Anna. Okay, so let me finish my math. 150. 1, 2, 3. Ugh, 86.97 under the look back method. I don't even know what that is. Let's check it out really quick. 86.97. Long-term contracts accounted for under percentage of completed method. So if you have a construction company and you're changing your method of accounting based on, your percentage of completion, then yeah, you might need to complete that. But I've never even done it. Okay. So amount owed, tax and payment. Yeah, there's nothing there. So you don't have to even fill out the rest. And that's it, right? This is where you would sign it and date it. Okay, done. Course over. Where's the exit box? I'm just kidding. Okay, so we obviously have more pages. Anna has a quick question. If you transfer money from your LLC to another foreign company in your name, how should you report it? Well, it depends on what it is. If it's a distribution, that's fine. And you know what? Let's make our thing more complicated. Other facts. James took 20 in distributions. Norway Co. took distributions. Like, honestly, this is more important for you to keep track of so that you and your business partner are more organized. But if it's an expense, we list it on here. If it's not an expense, we're going to list it on the K1 under distributions. And we'll see here on the K1 forms that you have like the beginning capital account, contributed, distributed, ending capital account. It really doesn't matter. I wouldn't really want to go too crazy with filling these out because it doesn't matter. It matters a lot internally. It matters internally to know whether or not you and your partner are taking your fair share of money. Obviously, like, this is a partnership. It's always going to be a partnership. There's always going to be more than one person. Even if it's you managing it, you need to make sure that you're getting the fair share of the profits. Like on this, according to this, both James and Norway Co. would be entitled to $75,000 of distributions on the current year. And that's what they can take. I took 10, I took 20, he took 10. Our company took 10. That means, obviously 65 available still for this is for Norway Co. to take, and I only got 55 available to take. So it's just important to transfer, to classify it how it is for your business. Is it an expense or is it a distribution? You just need to know that for your business. And if it's an expense, if both business partners agree it's an expense, otherwise it's going to be a distribution. So this is page 1, a very important page. Oh, we didn't look up the business code number. So IRS business activity code number. So we're going to look here. Here's the IRS business activity codes. You can just type in these codes. For me, I'm going to use like advertising and other related services. Most people are going to use like other professional scientific services. I like this one, 541-800. That's crazy. 541-800. Great. Got it. Did I answer your question, though, Anna? Yes? Okay. Yes. Okay, perfect. So what type? Now we're on page 2. So this is, page 1. Again, you can check your math. 350 income, 200 expenses, 150 net income, ordinary business income. Perfect. We have checked the accounting method. It's not a new return. Fine. It's an old return. The year, the date, the name, the address, the classifications. We are looking good. Page 2, what type of entity? We're going to call this a domestic limited liability company. It is an LLC. A partnership is the type of entity. It's usually for more like estate planning purposes. People use partnerships. It's just not as common. They're a little slower, a little more complicated. They have limited partnerships, limited liability partnerships, foreign partnerships, other, but it's a limited liability company. You know, it is what it is. At the end of the tax year, did any foreign or domestic corporation, partnership, or foreign government own directly or indirectly 50% or more of the profit loss of the partnership? If yes, attach B1, information on partners owning 50% or more of the partnership. 50% or more. So yeah, so let's get that schedule B1. Let's get that one up here too. Let's bust it out. 1065. Perfect. So we need to attach this one as well. This is going to be, again, Hatman LLC. Dang it. I want to pull this out to the side so I can reference it easier. You guys see the tax forms still, right? You see the tax forms? Confirm you can watch in the right pages. Okay, I think so. Actually, I'll check on YouTube. Yes, you see the tax forms. Okay, so let's do page 2. Let's keep this moving, so I can talk all day. So, so let's get to this. Let's fill out the B1 really quick. We have Norway Co. Employee identification number of any. Foreign, we're going to put type of entity, corporation. Country, organization, Norway. Maximum 50%. Individual is going to be James Baker. Foreign, Norway. And I think let's see the instructions. They have the instructions here. Complete, yes. They talk about this. Is pretty important to read. Example, Corporation A owns 50% of the Partnership B. Corporation A also owns 15% of Partnership C. Partnership C owns 70% of Partnership C. They talk about, you know, chains of ownerships and how to attribute ownership. You know, if you have all this stuff, again, you probably are doing your own taxes, but if you are, maybe you shouldn't be. I was trying to see if we need to list the whole country name, or if we can just write it out. Because it doesn't stay, it fits. So and we're mailing it, so put in Norway. Fine, 50%, and that's it. This form is done, except for the EIN is wrong. Well, I mean, it's made up anyways, but 81 1 2 3 4 5 6 7. Okay, so this form is actually good. I want to print this and make sure it's working. Save. Schedule B1. Desktop, perfect. Schedule B1, see how that pops up. And yes, it is complete. Foreign, Norway, foreign, Norway. Perfect. So we're closing that. We'll put this back. Good. So we're good with B1. B1's basically done here. Simple schedule. Let's keep it moving. So we did B1. And, you know, often that's going to be the case. Now, next question. Did any individual or estate own directly 50% or more? Yes, and it's the same thing. You need B1. Great. At the end of the tax year, did the partnership, the LLC, own any companies? No, it did not. No. Now, this is an important question, right? Does the partnership satisfy all 4 of the following conditions? The partnership's receipts were less than $250,000. Actually, in this terrible example, the receipts were $350,000, so it does not. However, I'm going to touch on this a little bit in more detail here. I'm going to make my face smaller. If your sales are less than 250, if your assets are less than $1 million, if you file everything before the due dates, and you're not filing M3, which you're not, you can put yes here, and that way you can avoid completing the balance sheet, Schedule L. Unfortunately for us, well, it's good for the example, the sales were over 250,000, so we have to do it. We have to put no, and we have to complete L, M1, and M2. But most people, if your sales are less than 250, you put yes on this box, and that way you don't really have to complete the last page. You know, I'm still going to complete it because the numbers are easy for most people anyways, and we're just going to do that. But now, really, we're just answering questions. Is this partnership a publicly traded partnership? Probably not. Otherwise, you'd have an accountant. Do the tax years your partnership have any debt that was canceled or forgiven? You're going to want to put no. If you put yes to any of these, there's more stuff you have to do. If you have forgiven debt, canceled debt, then yeah, you have to put yes here, and you should include that as income. Has the partner filed this disclosure statement for information on reportable transactions? Ugh. Form 8918. Let's just check it out really quick. So this is when you have like you're making an aggressive tax position. You have to like explain it because you want to just tell the IRS about it. Then yeah, you would do that, but you guys know. Does the partnership, does your LLC have accounts outside the US? If it does, then yes, you have to complete this form. Probably no. Did the partnership receive distributions from a foreign trust? Again, probably no. Is your partnership making a 754 election? Again, this is complicated. It's about basis adjustments for contributions of like unappreciated assets to the partnership. Is really complicated. It's more of a domestic issue. It doesn't really apply in most of these situations. Okay, does the partnership make this tax? Yeah, no. Is a partnership required to adjust the basis because of a substantial built-in loss or gain? This is again for depreciated property being contributed to the partnership. Any like-kind exchange properties? Again, probably not. Any distributions to tenancy in common or undivided interest partnership property? I don't think so. Does the partnership own a foreign LLC? Does this LLC own like a Belize LLC? If it does, then you have to do the statement. Does the partnership have foreign partners? Yes, this is a good one. Finally, enter the number of Form 8805 foreign partners information state forms filed. We're going to put 0 because we're not going to file any Form 8805s. We're going to file 18804, and that's important to check out the Form 8804. And we're going to do that. We're going to just do it anyways. It's going to send it. Enter the forms 8865. If this partnership owns a foreign partnership, we complete that. Did you make any? So did you have to file forms 1099? So you have to file the 1099 when you have a U.S. business and you're paying U.S. people. You don't have U.S. business, so it's going to be no. You're never going to file these forms. If yes, did you report? No. Does this LLC, the multi-member LLC, own a foreign corporation? No. Enter the number of partners that are foreign governments. Does the partnership make any payments to file a 1042? Definitely no. Was the partnership a specified domestic entity required to file Form 8938? No. That's about foreign bank accounts. Is the partnership 721C partnership? No. No. Interest or royalties that are not deductible under 267A. Those are related party interest and royalty payments, usually subject to some kind of treaty, not applicable. Did the partnership have an election under 163J? Again, that's for any, they changed the code. For any real property trade or business or any farming business. So 163J is a related party interest payment deduction code section. It's weird that they reference farming business. Does the partnership satisfy one or more of the following? Owns a pass-through entity with excess interest expense, receipts over 26 million, or a tax shelter? No. Are you doing 8996 for QEF, a qualified opportunity fund? If you don't know what it is, then it's no. Enter the foreign partner subject to 864C as interest in receiving a distribution from ownership. Interesting. 864C8. Complete Schedule K3 for each foreign partner subject to 864C8. Well, we are going to read this, guys, because this is brand new. K3 is a brand new form. We're going to just take it easy and just read the Cornell description of this. Put myself over here. A64, and we're looking at C8. So I think this is new. Okay, A64 is really important. So produce business. Okay, C. Effectively connected income. So remember, we talked about, we don't have that. Gain or loss of foreign persons from sale of certain partnership interests. Awesome. Notwithstanding any other provision, if a non-resident alien or foreign individual or foreign corporation owns directly or indirectly an interest in a partnership which is engaged in any trade or business within the United States. I love this. I love this. Because if it's not, then you don't have to deal with it. So for our example, we don't have to deal with it. It is not engaged in a trade or business. But if it is, then when you sell your partnership interest, it's basically taxable in the US, and then you determine the amount that's subject as effectively connected income. But in our example, it's not. So this is really interesting. But again, for us, we have a number of foreign partners is going to be, let's put a 0 in here just so we, let's actually put a 0 in all of these. Let me enter the number of, we're going to do 0 there. The number of 5471s here is going to be 0, 0. Okay, that's fine. That was really cool. Subsequent disclosure, no. Since the owner acquiring substantially all the properties, did you buy out the company by vote or value? Probably not. Is the partnership electing out of the centralized audit regime? Now this is really interesting. See instructions. Okay, I mean, okay, I think, no, this is more complicated. We're going to look at this here really quick. 622B. If a partnership that elects its audit, each partner of the non-BA is essentially subject to a separate audit with respect to the partnership-related items. The non-BBA partnership required to respond multiple information. Okay, so we want the BBA. Wait, I'm sorry, guys. I'm just want to confirm this while we're doing. There's a lot going on here. Partnerships will face new choices on their whether to elect out of the centralized audit regime, the bipartite, whom designate as a partner representative. So the IRC allows partnerships to elect out having BBA apply on a timely filed partnership return. So if you elect out of the BBA, each partner is subject to a separate audit with respect to the partnership related items. Interesting. So I think you would probably want one audit. We probably want the BBA. Yeah, I think we want it. No, we're not electing out. We want the BBA. And again, this is like if you want to read more about this, you can do that. I mean, it depends. I mean, audits are really infrequent. And again, the audit, you're reporting everything. And it's really more of a personal issue. That's why I like it. I like not electing out of it. So you need the taxpayer representative. So this is going to be personal representative is going to be James Baker. It can't be a company. James Baker. And we're going to put the main address. If the PR is an entity, enter the name for the individual. Yeah, so that's it. I mean, it's pretty straightforward there. And now we have the partner distributed share items. These are the K1 items. So page 1, line 22, other income, right? So let's get that from here. It's 150. Actually, before we go to the next section, questions. We got any questions from anyone? I finished this water. I'm gonna grab another water. Think of your questions. 5 seconds, I'll be back. Okay. Yeah, back. We're focused. No questions. Are you guys still here? We have 6 people still here. Let's check YouTube. Any questions, guys? Sure, please. I did that, buddy. Filet. I have a course. Definitely. Actually, that's what this is. Okay. Great. Not a dumb question, Vikas. So these are, and this is a very important question. This is an annual filing. This is for the year of 2021. It is due on March 15th. You can file an extension. It's very easy to file an extension. I'm going to do that next. That's actually a good question. The only unfortunate thing about this for you guys is that you have to mail it all. Again, not that big of a deal, but we're going to do the extension after we finish this form, I guess. So Mona says, when nothing changes in your company, is there any change you should do in the filing? Well, we're almost done with the filing, Mona, and the forms change every year. I mean, they changed this year, so some of the forms different. So we're, yeah, it's annually, Vika. So the forms, we're almost done with this. So we're gonna just keep crushing through it. We're gonna print it and we're gonna start assembling it. So 150 is no rental income, no activities, no rental activities, no royalties, no other gains. And because you have to separate different types of income, but that's basically what it's gonna be. Attach Schedule 2 for partner distributable share. And actually, there's something really important, Mona, that we're going to do is Schedule 2, K2, and K3. So we're actually going to check this because we're reporting items of international tax relevance. Because you're earning all the money abroad, that's why we're going to report it like that. And that's basically all that we do on this page is the ordinary income because none of the other things apply. So net income loss as a result of all this stuff is going to be 150, 123. And then analysis by partner type. The corporate, we have an individual active and a corporate active. So we're going to say this is 75, wait, 1, 2, 3, and then 75, 1, 2, 3. I think that's how we do it. Analysis by partner type. Yep. So we're going to split that up between the different partners, however they earned it, based on their type. If there's a partnership, exempt organization, if it's all individuals, if one's a limited partner and one's a general partner, depends on the agreement, but that's how you do it. In this example, let's go back here. We have the 150 net minus the $30,000. Well, we're going to go, Anna, we're going to go through the K1 and K2. We're not there yet. So we have the 150 net income, which is 150 in cash minus the 30K in distributions. So we're going to say it's 120, 1, 2, 3. And here's the cash at the end of the year. Usually it's going to be cash at the end of the year. And then partners capital accounts, 120, 1, 2, 3. Total liabilities and capital, total assets, 120, 1, 2, 3. And again, this is only because we have over 350,000 of sales. These can basically be blank. Balance at the beginning of the year is going to be 0. Capital contributed 0. Net income, great, 150, 1, 2, 3. Distributions of cash, 30, 1, 2, 3. Balance is 120 at the end of the year. I know I'm breezing through this. This is actually a really complicated part. It's usually super complicated, but I'm breezing through it right now because most people aren't going to fill this out. You can see this number and this number need to be the same. And that's it for the 1065. This is the core, the heart and soul of a partnership filing. It's actually the actual return. So let's print this. Let's save it as a PDF on my desktop. Get my face out of there, get that out of there. Cool. Desktop, great. So we're good with that. Yeah, I'm gonna do the extension last. So now we have the K1, and this is gonna be the same little exercise here. Partnership, employee identification number. Again, we have 81123456 Partnership's name is gonna be Hatman LLC. Put all caps. Then we have the address, 80. The center where you file the return, that's important. So for calendar 2021, right? Or tax year, and then you can enter the tax year. Remember, it's month, day, year. If you're closing your partnership, it's important to indicate that it's a final K1. If you're closing out the partnership, the K1 is going to be the return for the partner. I have to check about the K2 and the K3. We're going to do that next. So I guess we're going to check on here, Control F, where to mail, where to file. So these are this is the form 1065 instructions. We have the where to file. And if your partnership's office is in, well, we're in Florida. There you go. Any amount. This is we're going to send to Ogden, Utah. So let's go back to the K1 and let's put Ogden, Utah. That's where they're always going to be sent, basically. This is going to be foreign. Wow. Foreign James Baker. And we use the same address, whatever, 80 Southwest 8th Street, Miami, Florida, 33130. And James's portion of the income, half of the 150 is going to be 75,000. Again, this is interest, income, dividends, other stuff. Generally, most people who are watching this and doing their own taxes are going to only have service income. And this is going to be the net result. This is going to be half of the result on here because James is a 50% partner. If James is a 25% partner, it's going to be 37,500. That's going to be the net income there. Right here. So I kind of jumping around a little bit, but I'm hoping this isn't too confusing. So this is a foreign partner and a general partner. So it's both. What type of entity? This is an individual, not a retirement plan. The beginning, 50%, 50, 50, 50, 50, 50. That's the ownership percentage. If there are any share, there's no liabilities, so that's there. And if you want to do the capital account, you can. I almost would rather leave it blank. Many people just leave it blank all the time. This is going to be no here. But for this one, I guess it's 0. Capital contributed, net income is 75,123. Other decrease, and then withdrawals. There was a $20,000 withdrawal. Right, so that's going to be the activity, and then the ending capital account is 55,123, and that's how much money available to take out of the partnership James has. So this is going to be for James Baker, and I'm actually going to just print this, save as PDF. I'll call this James, and then we're going to just change it to make it now we're going to do Norway Co. And we'll probably put an address in Norway. I don't have one. You know, but probably you would like it would be better. Norway Co. This is going to be a corporation. And since they're 50-50, I don't have to change as much of the stuff. I can kind of leave it the same. 75 is going to just be 10. I guess the only difference here is going to be 65. Other than that, I think it's the same. Foreign you're going to put because you don't have a tax ID for the person, and that's fine. So this is the K1 for Norway Co. So I'm going to print this one, save as PDF, not James. I'll call it Norway Co. Cool. So now we have the K2. This is amazing because the K2 is separate from the K1. It's partners distributive share of international items attached to the 1065. So this is a summary, and I think partners And I think this is the K3, which these are brand new for this year, and I haven't really, to be honest with you, I had to fill these out before. They're brand new and the tax season just started, so I'm still figuring these out. But you're supposed to do your best and complete these forms. So the thing that's awesome is that the only thing that might apply, I think, was, there's no foreign tax credit limitations, no deductions, foreign tax credit limitations, other information for the foreign tax credits. You're not paying taxes. This company's not paying taxes. You would pay them personally on the results. There's no 250 deduction with the foreign derived intangible income. Distributions from foreign corps, nope. Section 951, nope, doesn't apply to you guys. 8621 PFIC investments, nope. These are more for offshore investments, right? The reason I was considering to fill the form out is foreign partners' character and source of income and deductions. So they have non-effectively connected income. Foreign source. So this is how I'd like to come in here and effectively say that it's all foreign source income. Income and deductions. So, okay, perfect. So we're going to put 350, 1, 2, 3 in this line. So it's ordinary business income, gross. And then we're coming and tell the IRS, so the foreign information is non-effectively connected income, and it's foreign source income. And this is really interesting, because if it's not effectively connected income, and we say you don't want to say it's U.S. source FDAP, because if it's FDAP, then it's subject to withholding. And if it's paid from U.S. clients, it could potentially be U.S. source other, but I would like to just say effectively it's all foreign source. Even if you're getting paid by U.S. people, but there's no withholding, you would probably put it in here. But I would lean towards putting it all as foreign source and making that be maybe your small mistake, but I think that's what I would do. And then we have expenses related to ordinary business income. Looks like they would fit in there pretty well. Net income loss. I don't know why you can't type it in there. $350, 123. Okay, foreign partners, character and source of income and deductions. So this was part 10. So we're going to keep finishing part 10. Gross income, gross. Worldwide gross income, 350. There's no ECI is effectively connected income. Crazy. 350. And I know this sounds like a lot, guys. I know it does, but we're almost done. We're gonna get it all done in 2 hours, and we're gonna get these filed. And I think this is the most conservative way to do it. We're really full out telling the IRS there's no U.S. source income, and now they have these forms that allow us to fully tell them that. Covered partnerships doesn't apply. So now what we need to do is fill out these on every line. Admin LLC, A1 dash. Is a partnership but withholding foreign partnership? No. Partnership in derivatives dealer? No. Part 10 applies. Yes, we attach part 10. No. And I think from there we can kind of leave it. Actually, you know what? If it doesn't complete, if yes, complete and attach part 1. If yes, complete. I don't think we need to attach the other parts. So I'm going to delete all the other pages. I'm only going to include part 10. Hatman LLC. Dios mío. Just gonna type it in. Who's excited for these new forms? You guys still here? Sleeping yet? These forms are they're literally brand new, and everyone's all the the tax professional community is going nuts about trying to figure out how to do all this stuff. Luckily for me and most of my clients, it can be pretty straightforward. Anna, does this answer your question? We're gonna assemble all the forms next. I guess we don't need to include this part. Okay, cool. So let's actually, yeah, Mona's here. Okay. Let's print this one and save this as Schedule K2. Great, desktop. And I'm actually, yeah, whatever. We'll play with that later. I think it should be cool. It's filled out. Good. Okay, close you. I'm gonna bring you back over here. Great. Let's do the K3 now. Check any. This is it. Okay. Foreign. No, information about the partnership and about the partner. So this one is in general, and then this one is for each partner. So so whatever, let's go through it together, guys. Admin, partnerships EIN is me 33130. Okay, partners is in. This is going to be foreign. James Baker. Again, 33130. Does part one apply? Let's skim through these parts and see how it goes. So, we have to put this on every line, huh? Actually, let's see. Does it say attach and complete? Perfect. So, foreign tax partner share of current year informational item. Okay, so we're gonna leave this one up here. We need this page because it has part one. Oh no, actually none of these apply. I don't think it applies. Foreign tax credit limitation, foreign. Same, it's the same thing. The same thing, except now we need to split it by partner. Yeah, so great. It's foreign partners character, and then this one is going to be the foreign partners character. Yeah, name of partner. And they're both for 1065. Yeah, I don't like this at all, but whatever. I'm gonna put this here 7. No, actually it's half of it. So half of it's 175. 3, and we're gonna do this is gonna be partnership Hatman LLC 81 James Baker. It's gonna be foreign. Yeah, so we're just gonna include these pages. Expenses is gonna be 100, 1 to 3, and again the net is gonna be 100, 1 to 3. Hatman LLC 81 dash Baker for it. Great. And then we have the last one, I think, worldwide gross income. We're just going to do this last page. is going to be 175. So no questions. You guys are following along. I love it. Okay, perfect. So it's going to be Hatman LLC, again, 81. Perfect. So I love how this came out. We're going to be no, 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 yes, no, no. So actually going to just do it like that. Not final, got the employer partnership for James Hatman. I like this. So let's print this one. Crazy. K3 is going to be right here. We're going to do it like this. James Baker. And then we're going to do and change it for Norway Co. So we can just make it easier for ourselves. Norway Co. Still foreign. Still the same stuff. It's all still halfsies. So this is going to be Norway Co. Norway Co. Then we have here Norway Co. And I think that's enough for this. So let's print this one too. Save as PDF. And we are going to have an assembly project here, right? So let's do it like this. So we have Norway Co. Desktop, great. So we did all these stupid K2 forms, K3 forms. I think they're dumb. I'm mad that we have to do it, but we're gonna give them everything, and we're gonna really tell them full on, we don't have to pay taxes, and this is why. That's the whole point of this, is to really fully tell the IRS all we need to tell them, so they don't even try and ever take taxes. And so they understand the partnership should not have withheld any taxes. So here we're gonna have the partnership Hatman LLC. Now we're doing the form 8804, and this is the withholding tax form. If you keep your books outside the United States, that's fine, whatever. Okay, I guess we need to do this on separate lines. It's the same. The company is almost always going to be the withholding agent. So on this example, 2 foreign partners. Total ECI to foreign partners is 0. And then you would sign this when you do the return too, but that's it. You know, we're just telling them there's 0, there's 0 here, and there's 0 here. It's not required. We're filing it and telling them there's nothing required, no withholding required. I like that actually. I haven't been doing it with all my returns. I'm going to start doing it with all the returns. Form 8804, save that. Perfect. So now this is activity codes. We did that. Where's the, and then if you want to file an extension, this maybe should have been separate, but it's also silly easy, right? The name is Hatman LLC. Yeah, so might make this a separate little section here, but if you need to file an extension, an extra 6 months. So instead of the returns being due March 15th, they're then due on September 15th. This is how we do it. Again, it's very, very simple. No, well, it's simple if you know how to type stuff. 1, 2, 3, 4, 5, 6, 7. Again, the 80 Southwest 8th Street, Miami, Florida, 33130. And then this is important. Application is 41065, code 0909. The organization is a foreign corporation. Nope. The organization is a corporation. Nope. It's checked. If checked, attach a statement. Nope. The organization is a partnership. Is a corporation or partnership that qualifies under regulations. I don't know what this is. Let's look this up. I don't know everything yet, guys. Well, I know a lot of stuff. Extension, but I don't know all this stuff. Extension of time in case of partnerships and citizen resident. Interesting. Partnerships to file on the 15th day of the 3rd month that closes the taxable year. Keep the records outside. US and Puerto Rico. So if you keep your books outside the US, I guess we're going to check that box. So yeah, okay, check the box. For me, this is for calendar year 2021. Super small line, 5A, but super important to complete. Zoom in a little bit. If you don't put the tax year, they don't know what's going on. Or the year beginning, remember in this example, March 1st, 2021, ending December 31st, 2021. We're just doing all year 2021. If it's less than 12 months, you put initial return. No taxes due, perfect. That's it, super easy, right? Where to file form 7004. And then here, if you are, we're looking for 1065. And your office in Florida, nope, 1065 Florida. This is where you're mailing it to. Certified mail, keep proof of mailing. You know, it's really important. If that's your address. If your mailing address is a foreign address, you send it here. You know, depends whatever your address is. That's where you're going to mail form 7004. Again, you know, certified mail before the date. It doesn't have to be received by the IRS. You have to just have it sent and certified before the 15th. Okay, we close you, close you, close you. So I think we did all the forms. Now let's assemble these bad boys. Let's put it all together. I'm going to open them all up. Any questions about the tax forms before I start just playing in PDF? Because I recommend using Adobe PDF. They have Adobe Reader. I have Acrobat Pro. You can probably get a 7-day free trial. Adobe DC Acrobat Pro. I'm going to open the documents in order. I'm going to open the 1065. I'm going to open then the B1. Then I'm going to open the okay, Vika, send us an email if you want to see the rest of it. I know it's a long meeting, but send us an email if you want to get the whole recording here. I'm going to start like package this up real nice and start like offering this to people like the clients and stuff, and maybe some kind of lead magnet. So we're going to sell it or something. So email us since you were here and we'll send you the full recording when you're done. Thanks for showing up and for your questions, buddy. I hope this was helpful. We're losing 30% of our group here, guys. Let's see how we're doing on YouTube. I've been asking questions. Wow. Can you please zoom a little bit? Thanks. I don't have. Hey, I don't know if that question is new. Form. Oh, come on. 5472 due April 15th. 65 due March 15th. Okay, glad to help there. Okay, so let me go to let's assemble this PDF and make a beautiful document, and then we'll just get it all ready for mailing. So we have the K1, K1, K2, K3, K3, and the 8804. Crazy. Okay, so I'm going to share my PDF screen and we're going to play with that a little bit, see if I can do that. So I have all these forms here. This one actually looks, okay, it looks fine. Attached form. Okay, we'll check that out in a minute. We're gonna go into that a little bit more. So K3, one thing I want to do is delete all these extra pages. So page 1 we need. And then it goes down to page this 17. Cool. So I'm going to delete 16 to 2. And then this page, delete U. Cool. And this K3, again, I'm going to do the same thing. James Baker. Perfect. Now the K2, again, the same exercise. We're just going to get part 10. So 15 to page 2, I believe we can get rid of. Save some paper. Don't need the last page. So great. So we just have part 10 on here. I love it. And the K2, again, marked just like this. We're going to do this. Actually, I think there's only one K2 because this is for the whole partnership, which is pretty cool. The K1, again, one form. K1, one form. Great. E1, got to delete the instructions page. And then the 1065 is amazing. So what I'm going to do is pull the 1065 over in a separate document. And I'm just going to drag all these things into the bottom of the 1065. And then we'll have it all in one document. That's how we're going to assemble it. Come on, guys. Let me. Okay, so the B1's there. Save that. The K1 is here. So a little PDF pro tip, if you zoom in here, you can't click on the movable portion. You have to click on this portion if you want to drag it to another document. So that's why I zoom in the PDF here. So I have on here, we have both K1s, cool. Now let's get this one, let's get all of these. We're gonna throw these on the next on the filing. Okay, we're going to zoom in here. This is just really technical assembly of it. Save that. Good, we got you. Save that. K2, this K3. And then the 8804, we're going to throw that on there too at the very end. And this needs to actually be signed. So we're going to go through that too. So let's close current tab. Let's close this one. Let's save this one too. Now, okay, screen sharing stopped, the window's closed. Now we have the form 1065 with everything on it. And this is going to be the whole package. I'm really excited that this is coming here. Okay, so a great question from Mona right here. I'm going to share my screen and we're going to go back to this. So the question is, and that's a great question. Let me open my chat so I can read the question. The Schedule K1-2 fields ordinary business income loss and self-employment incomes loss. When should we round the number? So that's a good question. So I didn't really go into this, right? On the K1 right here, I'm going to get this away. So now I have it all in one document. On the K1 here, we have like other income, other deductions, classifications, self-employment earnings, loss. I like to leave this blank again because I don't want there to be any confusion that you're subject to self-employment taxes. I don't think there's going to be an issue with the paper filing form. I don't think they're going to say, oh, this is wrong. I don't think it's going to cause a problem. So I would leave it blank. If you use it in tax software, they're going to put this whole 75 in self-employment earnings. But I would leave it blank. I would do it just like I've done it here. You could obviously, I guess we should probably put in the distributions here. I'm not going to change it. I'm just going to comment. Yeah, good point, Mona. Thanks for the question. Let's add a comment. Let's put this in here. It's going to be 20, 1, 2, 3. I'm going to actually make that black. And I think it's code A. So yeah, we have that in here for the distributions, and then we're going to put it in here too. We're going to have 10. Again, it's going to be code A. No, code A. And you can see if you need to see the K1 codes. That's a great question too. You can go to and I'm going to leave this here for a second. I'm going to show you that next. We'll go to the K1 codes. But those are actually fine like that. That's probably good since we have the distributions there. Again, this is all not subject to tax, so it doesn't really matter that much. One other thing I forgot to include. So let me stop sharing and let me go back to share my screen. So on my main course spreadsheet on this, I actually have, no. Hold on a second. I need to find that document. Oh, it's over here. So on this screen, I actually have two other statements I like to even include. Federal supporting statement for the application, and I had this as a different company. So let's say Hatman LLC has no effect on the income. All partners of Hatman LLC are non-residents of the United States during 2021. And this is like the fact no official business, no employees, no tangible assets. I like to include that. And I also have to include the other deductions for Hatman LLC. So I'm going to actually print this too. We're going to say this is PDF. We'll call this statements on the desktop. We're going to throw this in our PDF document as well. The statements go after the K1s. I'm going to put the statements back here after everything. Perfect. Perfect. Okay. So let me stop share and let me bring this back here. And I'm going to share the full PDF. Yes, Mona, everything we rounding up. If it's after 0.5, you round it up to the zero. I would not sweat rounding errors. The IRS rounds everything. So if it's like 5.4, you down to 5. If it's 5.5 or up, it's rounded to 6. Okay, so this is how we've done the filing here. I'm pretty happy with this. It's coming out really good. And I wish I had to actually file this. Obviously, I made this all up, so I don't have to really file it. But here's how we're going to have it set up. We have the 1065 page 1, page 2, questions answered, page 3. And we're going to have to, first of all, so we're going to have to sign this page, print it, sign this page, and date it. Name, I don't think you have to sign this page. That's fine. Then we have this, perfect. No sign here, also completed. K1 for James Baker. K1 for Norwayco, and you can see the differences here. We have the K2, and we're only including part 10. Part 10. When should we write the statement? Like our profit? If I'll show you the statement. If you don't need to write the statement. If you're going to do K2, so Mona asked the question, when can we write the statement? And I'm going to go through, we're going to get to the statement. So these forms K2 are new. And on this form, we can really tell the IRS that it's all foreign source income. On this, I'm pointing with my finger. It's all foreign source income. You can see right here. And then you can see the total, and then you can see the total of expenses. And then you can see, and that's listed. We're telling the IRS it's all foreign source here. That form didn't exist last year. So if you're doing K2 and K3, you probably don't need a statement. If we're mailing it, I'm going to give them everything. I want to fully explain it to them because I assume that the IRS are idiots. And they're probably not watching this course. So now we have K3. In K3, again, we filled it out like this. This is for James. And then we have the 175, 100, and your portion of the split here. And then we have it for Norwayco. We have 175, 100, and it's split here. And then, I like to have the other deductions, the summary, admin expenses, software expenses, contractor expenses, whether or not this should be at the end or earlier. I think we should do it at the end. I like it here. And then we have the other supporting statement, Hatman LLC, and you can copy this down, pause the video, watch it per the application of Revenue Code 864C4. And that's what we talked about. This company has no effectively connected engaged or trade or business, all partners of our non-residents in the United States. The taxpayer has no fixed place of business, no employees, no assets, is not working with agents, there's no income, which can be considered income of a source of the United States per application of code 861A. So I like to throw that in there too, because they didn't have those statements before. And then I also, we're doing the 8804, and I'm still a little hesitant on that, but we're gonna sign this as well. And Form 8804 also, let's check, let's play a little bit with Form 8804 right now, because that's the last page. And Mona, did you do the forms with me? Because I know you're in here. Did anyone else do the forms with me? Are you guys going through the forms? Let me just stay. Okay, and just now know about the new forms that terrify you. Yeah, the new forms, remember the new forms. It's the new forms, and let me share my screen again. The new forms are easy. They're don't get overwhelmed by the new forms, because they really are filling out the top and then two numbers. The new form is just page 1, check the boxes, basic information, and then skip to part 10. And then when you go all the way down to part 10, see the parts right here? You go all the way down to part 10. And then you're only putting in on the K3, this partner's total gross income, like gross income. All the other stuff is going to be 0. And then the total, and then total expenses. Two numbers you're throwing in there, and then this one you're throwing in the worldwide gross income, not ECI. We don't want to say it's effectively connected. And that's it. There's 3 numbers you put in your total income, total sales, total expenses, total sales. And then you have to fill out some stuff at the top and all of that. So it's not that bad if you're only filling out that portion. Form 8804 instructions. Okay, actually, let's check these out. So let's check these out really quick, because I'm still on the fence with whether we should file these or not. So since January, a foreign partnership has been subject to withholding under this section on the transfer of interest of other partnerships. Okay, whatever. Purpose of forms: use these forms to pay and report section 1446 withholding tax based on effectively connected taxable income allocable to foreign partners defined in this section. File an 8805 for each partner. Foreign partners, once you task form 8805 to their income tax returns to get a withholding credit, of course. 8805 can be completed by foreign trusts or estates. And form 8813 is how you pay the tax. Fine. Every partnership that has effectively connected gross income allocable to a foreign partner, effectively connected gross income, regardless of whether it had effectively connected taxable income allocable to the foreign partner. The partnership must also fight for each partner on whose behalf it paid taxes. Perfect. So it looks like we should file this. Every partnership that has effectively connected gross income allocable to a foreign partner must file, regardless of whether it had effectively connected taxable income allocable to a foreign partner. So I guess they're saying, so this actually doesn't go with your partnership return, it goes separately. Okay. When to file. Let me read who must file. Every partnership that has effectively connected gross income. It doesn't have effectively connected taxable income. So I'm actually going to delete it. I'm sorry. I hope the other guy, see, I'm going to renege. on what I'm saying, and I'm actually going to delete it. I don't like it. I don't like it one bit. So let's stop my share and let's share my screen. And we're going to share this. And I'm not doing it. I don't like it, even though it's kind of effectively telling the IRS. I don't like it. And it goes, it's a separate filing. So we're going to delete it from this. And now we have the complete filing. Excuse me. Okay. Cool. Now we're good. Now we're ready to file this. And I really don't think we should do the 8804. I know I'm back and forth on this. It's because it's not clear. The IRS isn't really making it clear for us. Okay, so thanks for the help. Yeah, I'm glad. Thanks for staying through this far. Well, I'm really doing this for you and for my team. So, okay. So we have that. Let's go back here. So now we're going to go back to, let's see what's next. There's a couple other things. Assembling the package. We already assembled it. This is the wrong page. Completing the forms. When I'm trying to go through the same line of questioning here. So let's delete this. So we assembled it, and now we mailed the final forms. So we have the forms, print them, we have to sign them, and then in Google, where to mail form 1065. And again, where to file your taxes, that's fine. If the total assets is less than 10 million, fine. You're gonna mail it to this address, Department of the Treasury, Internal Revenue Service, Ogden, Utah. Mail it with certified mail and keep the tracking and keep proof of mailing. You need to have proof that you mailed it in case they ever ask. And this is where you're going to mail it to. It's pretty easy. Google where to file your taxes form 1065. And that's it. You're done with the filing of the taxes 1065. I have a couple other bonus videos I want to do for you. Let's see, bonus. So that's that's kind of it, right? That's introduction. So in conclusion, right? Let me just talk to you for a minute. In conclusion, if you have an LLC and you're more than one owner of the LLC, you have to obviously renew the company with the state. You have to deal with that FinCEN thing that's brand new. And there's going to be a bonus video about that too. And then you also have to prepare your tax forms. And in this video, we went over how you download the forms, how you fill out the forms, how to do the 1065, the B1, the K1, the K2, the K3, the statements you need, how to assemble it all in PDF, how to print it, sign it, and then how to mail it to the IRS and keep the tracking. That's what you need to do. If you're a DIY person, I'm so happy you're here and I can help you with this. And now I have a couple bonus videos for you. Okay. So let me share my screen and we'll go through some of these. And these are actually really important. Okay. So I'm going to share my screen here. So in bonus, I'm going to first show you how to complete the form W-9. Many people are going to ask for this form. And that's why it's important to do your partnership tax filing, because if you give someone a W-9 and they give you a 1099 and it doesn't match and your total sales don't match on your tax return, the IRS would ask you for this, right? And then we're going to do a quick 1040 NR for the foreign individual partners for James Baker, and then a quick 1120F for Norwayco, because honestly, these are the entities that would be required to pay the taxes if there was effectively connected taxable income. And on this, I can show you how to prepare these forms, just basically so that you can, if there's an issue in the future, you can take expenses on it and you can be a little proactive. It starts the statute of limitations, right? Unfortunately for this, you need an ITIN, and for this, you need an EIN for the foreign corp to file this form. But we're going to go through it anyways. So first, let's do the W-9. So let's go to this. Let's Google search form W-9. And the form W-9 is what you're going to be giving anyone who's basically paying you. It's really important to know how to do this, right? Because if you don't, people might not pay you. So I'm going to complete it without even referencing my notes. I have it. I memorized it now. Hatman LLC is the name shown in your income tax return. This is a limited liability company. It's a P for partnership because it is a partnership. Address 8th Street, 130. And then we're going to put in the EIN number 81123456 and then you print and sign it. It's a US person, you know, it's like that's the form. That's how you complete Form W-9 for a partnership. And that should be fine. You print this and you give it to, you sign it, and then you give it to anyone who asks you for a tax identification number. If they ask you for your EIN or whatever, you can give them your Form W-9, and they will probably give you a 1099 at the end of the year. That's not a problem. The 1099 will show how much they paid you, but you want the 1099 to what they paid you to match what you have as sales on your tax return. Okay, so that's the first one, right? I mean, I don't really have much more to say about this W-9 form. There's not much to it, to be honest with you. So let's go back. What's next? Next bonus video, how to complete Form 1040 NR for foreign partners. So let's go to Form 1040 NR. And this is a good form. You need an ITIN to do it, to be honest with you. If you don't have an ITIN, you would put applied for here. Applied for, I guess. You put single or you're married. This is going to be James Baker. Obviously, you put your address, not mine. Oh, this is going to be Florida. And then we're going to zip here 33130. If you have your foreign country, you know, obviously you put that in. If you have kids, you know, you're not going to put your kids on here, they don't apply. And this is all going to be zero, you know, you're going to have any income. That's the whole point. You're effectively telling the IRS you have no income. You need to show a little income in order to have a reason to apply for an ITIN. So it's a little bit, you know, it's a little bit counterintuitive, I suppose. Applying for an ITIN is a whole separate exercise. You know, we do it for our clients. You need to attach a certified passport to the filing. Complete Form W-7, which, you know, it has a lot to it. You have to complete this and answer it the right way, attach your certified passport, and then you also have to have a reason to file to get to request an ITIN. You know, it's really non-resident filing a U.S. tax return. You need to have a reason to file a tax return, right? So let me get rid of you, get rid of you. Oops. Get rid of you. Here we are. So assuming you have an SSN, whether you use it now or whether you just got an ITIN, this is a good way. Anytime when do you receive, exchange, or otherwise have virtual currency? I did love cryptos. Great, so that's it. This is not the whole form. Form 1040 NR Schedule OI, I believe. You would also have to attach this schedule to it. This is going to be names shown on Form 1040 NR, James Baker, applied for, Norway. Have you ever been a green card holder? No. You just have to answer these. No, I haven't. Are you a citizen? Have you ever been a green card holder? Have you ever had, and your immigration status, B1 visa? Let's say I have a tourist visa. No, I haven't. And then you have to enter your days in the country during the year. Let's say 0 days, 2021, 1 day, 0 days. I was just passing through. Let's give myself like 11 days. I came to Miami to open a bank account with James Baker, CPA, funny, same name, different person. Do you file an income tax return for prior year? Nope, didn't have to. No. And you're going to include all of this you're going to attach this to your 1040 NR. And that's going to be like the whole tax return, honestly, if in this situation of what we're doing. No. So like this is it, you know, attach this one to this one if you have a social or an ITIN. If you don't, then you have to request one, and it doesn't really work otherwise. So it's kind of complicated. So it's kind of like a bonus that doesn't really help. It kind of helps if you have an ITIN. If you make a lot of money, it's more important. If you make $300, then you don't need to deal with any of these two. If you make $1 million, then yeah, maybe get an ITIN and tell the IRS it like, look, I have no income, and just do it effectively so it starts the statute of limitations. And that again, it's for my big spenders. Again, for the people who make a lot of money, it's more important. And then a quick form of 1120F, and this is for foreign corps. Again, this is going to be a similar thing. This is going to be here. We have Norway Co. Again, it's weird we're using US address for everything, but Street, Miami, Florida. I don't file many of these guys. I'm going to be honest with you. Initial return. You need an EIN number, otherwise it's just like nothing happens, you know. So, but anyways, we're going to put foreign here. But you need to request one, and you can request one on Form SS4, Form SS4. Again, that's not really for this video. I wouldn't do all this yourself if you have all this stuff going on. If you don't make enough money, you probably don't need to file this. But I'm going to just show you anyways, because I said I would. Norway, data incorporated, Norway 1/1/2020. Norway, actually, you know what? We keep in the US, 80 Southwest 8th Street. Principal location of worldwide business is definitely going to be Norway. Has to be a foreign place. You know what? This should be Norway too. But having your mailing address here doesn't mean you have a US trade or business. It's just a mailing address. If you had an agent, you can put accountant James Baker. Again, kind of confusing because my name is James Baker. 80 Southwest 8th Street. Okay, and then you have to enter the business activity code number, you know, all that stuff, method of accounting, cash. And after that, there's going to be, everything else is going to be blank. You just have to answer all these questions. And again, most of them are going to be no. They're going to almost all be no, because we're not doing anything. We're filing a protected return. Income from U.S. sources not effectively connected with account raised in the United States. And again, this is going to be, this is way more complicated than I signed up for a bonus video, but that's basically it, right? The completing the first page, answering the questions, and going through it. That's what a foreign corp would fill out. I don't recommend doing this yourself. It is quite complicated, and there are a lot of caveats. If you have a social and you have an ITIN and you want to do your personal return by yourself, definitely not a problem doing that, mailing that in. Again, you Google search where to mail this form. But I'm gonna change this bonus video to be how and when to complete forms 1040 NR and 1120 F, and that's gonna lump this all into one thing. Okay, need an ITIN and EIN. So I mean that's it, guys. Once you do all this stuff, your company is legit. Your company is all set up. Your work is done, and you can continue selling more, getting more sales. The W-9 is really important and really helpful, but the rest of it is kind of like that. So let me know if you have any other questions. I'm going to answer some questions that we have on the YouTube. Say due date. Great question, Antonio Max. If part of your expenses were done, if you have expenses from U.S. companies, I'm still going to put it all as non-effectively connected income, all the worldwide income on the right column. I don't want to say anything in the U.S. I'd rather leave it all foreign and be wrong on that than tell them it's U.S. source. You know, that's how I'm filling out everything on K2 and K3, showing that it is foreign, that it's not U.S. So let me bust that form out again really quick. Irs Form K3. Yeah, so at the bottom on the second to last page, we have foreign source. I'm going to put it all as foreign source, non-ECI foreign source. It's very important to say it's non-ECI. It technically would be non-ECI US source other, but if you're doing your taxes yourself, you know, the IRS is going to give you a little bit of leeway here. And that's why I'm putting foreign source for everything. That was for you, Antonio, on the YouTube chat. Sean has some questions. If a country doesn't have a tax treaty, avoid double taxation is 3. All you do is send the 1065 with the name of the company, a statement that you're not supposed to do anything because you're not living in the US. If you're not there, then you can't, then I can't use 1040. I don't have an ITIN. I wouldn't be able to get one, otherwise we'd be breaking double taxation. Well, Sean, there's no taxation. If you do it right, there's no taxation in the US. So there's no double treaty issue. There's no double tax issue. The tax treaties really are to define how the tax code is interpreted between the laws between two different countries, I mean. So the US, Mexico, US, Canada tax treaties are very comprehensive because we know we're neighboring countries. You do a lot of business between the countries. So the treaties are super comprehensive. It doesn't necessarily change what the code says. It just might change the interpretation from a cross-border transaction. It's all about the sourcing. It's the tax treaty determines who has the right to tax certain things. So in this instance, you never have, the US doesn't have, if you're not doing anything in the US, you have no effectively connected income and you're not a US person, you don't have to pay taxes in the US. So the treaty doesn't really matter because you're not paying any taxes in the US. So it all comes down to the treaty, maybe in your country. And again, if you're not paying taxes in the US, you're not a US entity, it's like a disregarded entity can't even claim the treaty. So it's you have to see if you even qualify to use the treaty for what you're doing. And again, if you just send the 1065 with the if you send the 1065 with the name of the company and the statement that you're not supposed to do anything because you're not living in the US. It doesn't matter where you're living. It matters that you have no effectively connected income, which is why on my statement that I showed in the the training that I did now is that is that you have more saying that why you don't have to pay taxes in the US. And even though you have to fill out the form, it's the reason I put the total sales and expenses is because when you get the 1099s, it will match with the IRS. So I still think if you have a multi-member LLC, you have to file the 1065 and provide all the information and answer all the questions and all the forms. I think that's just to share the information with the IRS. I think it's required and you want it to match the 1099s. And then the profits from the partnership are attributed to the partners. But the partners don't have to pay tax on that income because it's not effectively connected income with the US trade or business. So that's kind of the point there. So if you have a multi-member LLC, that's why you file the 1065. And because of the code, it's still, you don't pay taxes because the partners don't have to pay tax on the profits, on the income attributed to them. And that's when I would recommend, oh, good. Sean has a lot of questions. That's when I would recommend you file personal returns. And a question from Luis is that, is the protective 1040 NR necessary for single owner LLCs if you have an ITIN? The protective LLC, the protective 1040 NR is recommended when you have a lot of money, when you make a lot of profits. If you don't make that much money, if you make $5,000, $10,000, you make less than 50 grand, it's not that big of a deal. The IRS isn't going to persecute you, and just file the forms you require, the 5472. You don't really need a personal filing. If you have an ITIN and you can do it, it's a really simple filing, which I tried to go over, but it's kind of hard without all of the facts in the example. And then Sean has one last question. He reads that any compensation from a U.S. company is effectively connected, and the law is incomplete. Not the law, but the explanation is incomplete. The explanation that you're referring to, and let me share my screen as a little bonus thing here, is about FDAP income. Well, when they say compensation from a U.S. company, they're talking about employee compensation. And if you're getting paid from a U.S. company for doing work in the U.S., then it's effectively connected with U.S. trade or business. It's a really complicated subject, and that's when it would be FDAP income. But if they're paying you as a contractor, which is generally any U.S. company paying a foreign person is going to pay them as a contractor, because I can't pay you, Sean, with a W-2 and say you're an employee unless you have legal right to work in the U.S. So it's really complicated, and how the IRS explains these laws and how they enforce them, and the nuances between an employee, who's an employee, what's compensation, what's not compensation. But in the context of this video and what we're doing and what we're talking about, if you are getting paid just like checks and you're not like a real employee, even if one company is paying you all the time, it doesn't mean that you have to pay tax in the US. That's why we have to just do all these forms and do them in time and do them right, to kind of protect yourself and to just be a step ahead. In case the IRS ever has questions, you can say, look, I did all my forms, I filed them correctly, and that's why I don't have to pay taxes. Okay, So I appreciate you all being here. If you have any other questions, send us an email. You know, we do this, you know, message us. We're happy to help. You know, it's tax season. We're very busy. I hope this course was helpful. And, you know, follow us on YouTube, subscribe, like, all that stuff. And I'll see you guys later. I have another call I got to jump to. I hope this was helpful. And, you know, have a great day. Thank you very much. Bye, team. I guess my team has no questions either. Okay, see you guys.